Welcome, everyone, to another episode of The Everyday Trader. This is Greg Jensen, CEO of Options Animal. Good to be with you today. And good to be back with my world traveling friend, Eric Hale from Trader Oasis.
Yes, everybody, it is good to be back. I need a vacation from my vacation, though. It wasn't a vacation, it was a workcation, as you know.
That's right. I've been to Camp Kotok. In fact, I've been very sad this last week, to be honest, that I wasn't there with you. As I was seeing pictures come through and saw that there was a lot of fish caught. I'm sure some very interesting discussions as to the state of the economy, the state of inflation, the state of markets. I know there were a lot of really big influential people there. There's a picture of David Kotok himself speaking at the front of the group there. How was the event? I'm going to turn the ball over to you for a little bit and kind of give us a little rundown of what happened. I know some of the things you're not going to be able to talk about because of, yeah, I just lost my rule. Can't talk about
Chatham
it.
House.
Chatham House. There we go.
Well, it started off
The Fight Club rule. That's what I think we should call it.
It started pretty nice. That one of the hedge fund managers, and I can say his name is David Sherman, sent out an invitation saying anybody in Chicago want to fly out on private with me, and oh, sure. So there were six of us that flew out, and you probably recognize the back of Bianco and Danielle DiMartino booth, and that's Matt Tierman, and behind me was Chad Seegers. So we had some really awesome discussions on the plane. I mean, it started, really in depth, and everybody sharing data, and it was a good discussion. But showing you recognize this room. This is Lean's Lodge, and this is where everybody, we get together, we have dinner. There's Scott Weeks, who runs Lean's Lodge, built a new shed, and so we were doing some of the meetings that sometimes it's hard to hear in that room. So we did some meetings here. Of course, I did lots of fishing. We fish on these canoes
that is an awesome picture right there, by the way.
Yeah, that's just. So this is what you're doing all day long, and then you're doing this. You're pulling in fish, and we eat all the fish too. So they get eaten either at lunch or they all get eaten at lunch. So either fried, some of them are fried up, and then the end of the week they go into chowder. There is a tradition that the newbies have to skin an eel. So this is Sandra Levant. You know Sandra, she works with Jillian. You can see her pulling, and there's David helping her out, pull the skin off of an eel. That's the tradition. Holly Wade, who's the chief economist for the NFIB, was there. I just flashing through some of these pictures. We have these roundtable discussions. You can see Nadig and Sam Rines, along with Bianco. I'm not going to dive too deep into the topics. Of course, there's a picture of dinner. It's just a good time. It's a good time. I took a day and went kayaking too with a bunch of people. That was a lot of fun. So just a good time. But it is a lot of thinking. I mean, we get up at 7 a.m., you have breakfast, you talk, everybody's talking markets and economy and world politics. And then we, fish with somebody, and you're, all day long talking with those people, then lunchtime discussions, then fishing again. You get a short break in the middle of the day, and then we go to dinner. There's a topic around dinner, and then everybody talks, and then we kind of hang out on the back porch. And most of the time there's a group of us that go to play poker. So we get, 10 to 20 people kind of hanging either at the poker table or hanging out. And there's always discussion there. That wraps up around midnight. So they're getting up again at 6:30 in the morning. And so just getting back, it's overwhelming. And, much of the meeting is run under Chatham House rules. And so who said what, we can't really share as to who said what. I'm going to give you a flavor of some of the topics. So the first night, the discussion was regarding the rule of law, and does it exist or not? And this is a really broad concept. And sometimes it comes up internationally. People talk about, can you trust China? Are they going to go change the rules? Well, guess what? We changed the rules as well. There was a chief economist there who happened to be with one of the GSE housing companies, the Fannie Mae, Freddie Macs, and during 2008, and when the feces hit the fan, what happened was those got taken over as which was technically not legal. So they got put into an LLC and then they were acquired by the government. And so we bent the law to make that happen. And that was I had a bit of an epiphany here because we've seen some stuff that happened during COVID too, where certain things have been twisted. And it's not the last time. Think of, is it Jane Street? What's the there's a something street LLC that was formed by the LLC, by the Federal Reserve to help with some of the CDO products. I don't know. You go back and think about what happened, and Nick Timoros's book $1 Trillion Triage talks about the extent that we went through to try and save the economy. And the government did backflips and got creative in rules and basically did whatever was needed to save the economy. And looking back, I'm a free market libertarian. I'm a member of the Mises Institute. I'm a Cato benefactor. So it's a libertarian organization. And it doesn't sit well with me that the government is picking winners and losers. But
Well, we watched him do that just a little over a year ago too, right? With or was that just earlier this March? No, that was just this March. No, it was a year ago. Our banking little crisis where we had Silicon.
Yeah. The Silicon Valley Bank. That's another example. Should we have bailed out Silicon Valley Bank or
perfect
just
example.
let everybody stick? Well, one of the sides of that is one of the major payroll processors held their money there. So who could have been? I think there are two reasons why that payroll processor was a big one, that people were not going to get paychecks who at no fault of their own or no fault of their employers, just because the payroll processing company chose that bank, all of 20 million people weren't going to get paychecks because this processor was up against the wall. But the other side of it is, and you and we talked about this before, is if the small banks fail, what do you do and I do as somebody who needs a bank account? We have accounts at small banks and big banks. But you don't need your small bank accounts if there's a risk of them going under. And there would have been a huge migration away from small banks. And those banks are very important because that's where a lot of the small business is a very important part of this economy, very important part of our labor market. And without small businesses, and the small business loans happen mostly from regional banks. So there could have been major ramifications if they didn't take over Silicon Valley Bank. So the question is, the fact that there's a challenge to the rule of law, does that threaten capital markets? And the key takeaway for me is that it's actually probably a good thing as long as the Fed's aligned with trying to do the right thing for the economy. Like I said, I don't like the winners and losers. I don't like the picking of winners or losers, but this sort of theme built because the next topic was on modern monetary theory. And the discussion is, are we modern monetary theory? And this is basically debt doesn't matter. And the Fed, we print our own money. We have our own army. We can print as much money as we want. And there's no such thing as debt. And if we have inflation get out of control, we just raise taxes. Well, it sounds kind of what we're doing.
Yeah. I was going to say, as much as I hate the idea of modern monetary theory, it's what we're doing.
And that was the debate. Are we really if you try to look at the difference between what's known as Keynesian, so John Maynard Keynes, the major difference between Keynesian theory and MMT is regards to the debt and deficit, because Keynes even still believed that debt is a problem. And that was actually the topic the next day, was about debt deficit and defense, which we could have spent the weekend literally talking about that one topic. And unfortunately, that topic got really shortchanged. But over the course of these discussions, I'm going to tell you what I came away with. And that is, we are solidly you can debate MMT and I might give it to you. We are solidly in a Keynesian economy, and the government is spending money to ensure that it's about stability. And of course, there's picking of winners and losers, and there's crony capitalism, which is what I absolutely hate. But if I sit back and think about some discussion came about the reserve currency of the world, and it is the US dollar. And up until 51 years ago, for the previous $4,000 of currency history, whether it was a piece of silver, a piece of gold, or a piece of paper that represented a piece of silver, a piece of gold, there was some physical thing behind that. For the past 51 years, was it maybe 52, since the Bretton Woods,
Yeah, since
we went
Bretton
off the
Woods.
gold standard, all we have is a piece of fiat piece of paper that says it's worth something. And the only reason that we believe it's worth something is because of trust.
Yep.
Same thing with Bitcoin. Bitcoin's only, it's like Beanie Babies. What's it worth? Whatever people think it's worth. And this discussion came back and hit me broadside about defense. And that the reason we need, and this was my conclusion from the discussion, but with our own military, that is, the police force around the world, we are ensuring that we are going to be a stable currency. And yes, there's going to be some fluctuations in the dollar prices. And more importantly, our debt. We are going to stand behind our debt because there is trust. And that's really the big picture. And so I had a real hard time, stayed up late at night thinking about this. And while it doesn't agree with what I believe personally, I think we should let some companies fail. I think there's some zombie companies that probably don't deserve to exist. Take that aside. The system that we have set up, and the Republicans, the Democrats, the Treasury, the Department of Defense, the Federal Reserve are all on the same playbook. And the takeaway is what we've seen for the past 15 years is what we're going to see for the next 15 years. So yes, there are going to be periods of time where the market may pull back, but long term, buy, baby, buy.
Long term, you buy the dip. Yep.
That's my key takeaway.
Trade the rip to the downside because you can make money, but use the proceeds to buy the dip. I think that's a really important takeaway for a lot of people who want to buy into the fear of some of the perma bears and this idea of the dollar's going to collapse one day and we're going to go back to gold and gold's going to go to $10,000 an ounce. It probably will go to $10,000 an ounce, but that doesn't mean the S&P isn't going to go to 10,000 or 12,000 one day either. It probably will. Yeah. And you just use the proceeds when you make money trading to the downside to buy more shares of the SPY. If you want to be really truly a non-stock picker, or if you want to get aggressive, you look at the future of companies and you got to say, man, Tesla's got their eye on the future probably better than anybody right now. And you buy shares of Tesla when you get pullbacks, right?
Yeah.
I mean, I know I'm preaching to the choir talking about Tesla because that's one of your, you've been a Tesla fan for a long time.
Sure. Yeah, there's going to be winners and losers. And, there was actually a big discussion about the election, and the consensus is that I'm going to drop I can do a PG-13 word once, right?
Yeah.
The Trump campaign, this might surprise you, is a shit show. And the Kamala Harris campaign seems to have surprised people. That she went from being not likable to some sort of savior. And that doesn't surprise me at all. That's exactly what I expected. And talking to some people who are close to the campaigns have said that they say they talk with the campaigns that they're totally, the Trump campaign is totally flummoxed. And they expect that to continue. I don't think so, because they have a lot of smart people that are on the campaign. And I think what you want about Trump, I don't know did you see this poll that Elon Musk did on Twitter?
Yeah.
Like 6 million people. Would you vote for Trump or would you vote for Harris? 75% of the people said Trump. And
given Elon Musk has already thrown his hat behind Donald Trump, there might be a little bias to that poll, but that's a huge swing. All
It
right, I'm
is a
gonna
huge
pull,
gap, and I would
I'm
encourage
pulling you off.
people.
I'm pulling you off elections because we'll go forever.
No, just real quick, I would
All
encourage
right.
people to go back to 2016
Yeah.
and think about how you felt then and look what happened. There is a whole huge chunk of Americans who are not being heard, and the media is skewed towards one side. You have, if you're on one side, you like it, you shouldn't like it because you want to hear the truth, and we're not getting the unfettered truth. Half of Americans, at least half of Americans, or somewhere around there, voted for Trump in 16, and I that many, maybe more, maybe less, I don't know.
I'm still sticking
This
with my prediction.
what's that?
269 to 269.
I'm just telling you, like we said before, coming back from our Jackson Hole conversation, we'll transition Jackson Hole next, is that this election is about to get crazy, and it is only starting to get crazy, and it is only going to get crazier for the next 74 days.
Yeah. Yeah. No, the next 10 weeks is absolutely going to be a lot of volatility. And from that standpoint, the volatility is not slowing down with what's going on in Jackson Hole this week either. Are you good? You can bring more Kotok stuff back up if we go to it. But obviously the news of today is Fed Chair Powell spoke in Jackson Hole at their annual summit that's held by the Kansas City Federal Reserve there in Jackson Hole, Wyoming, and uh, Fed Chair Powell made it very clear that the next rate path is cutting rates. And I don't know that it necessarily cemented that it's going to happen in September at this next meeting, but it very possibly could, as they're acknowledging that the employment market is weakening and showing signs of softness. That huge revision this week to the annual number to the downside, of course, I think was a lot of ammunition for them to say, okay, the job market is showing weakness. We want to get out in front of the job market. And I don't know. I mean, it's interesting to see, and you've been a huge advocate about this. You've said this for a long time about rate cuts and when they actually happen, is that rate cuts are usually perceived as bullish for risk equities, but it also depends on when they're cutting rates and why they're cutting rates. And if we are cutting rates heading into a recession right now, this may actually be a bad thing for the markets. I don't know. What are your thoughts on Jay Powell this morning?
My story doesn't change on that. We've cut rates 8 times in the past. 5 times the market has done terribly. 3 times the market has done very, very well. The one common denominator is the 5 times when the market has gone down, it's been a recession. And when the market's gone up, it's not been a recession. So that's the real question that we need to look at. And your comment about the labor thing, there's actually a positive story to that. It's been we what happened was the Bureau of Labor Statistics once a quarter does a sort of calibration. Are we looking at the right number of people? And so just here's an analogy for you to think of, and that is, if imagine you don't have a gas tank level to tell you how much is in your gas tank, and you're just keeping track of how much gas you took out or how much gas you put in. So you're burning, how much gas you use, and so I'm just going to keep track of the differences and then make an assumption of where my tank is. And so that's what we're doing, is we're looking at the puts and takes on this employment number, but then we have to check in and say, is it really the right number? And that's what was done. And we're like, okay, well, the actual total number of workers is 818 million less than or 818,000.
Thousand, yeah.
818,000. Yeah, 18 million. That's a lot. So the decimal places over a little bit, but still it's a significant number. The positive story about that is we've had phenomenal productivity, and productivity is output divided by hours worked. And if you're saying, wait a minute, there's less workers and our productivity has been good, this means our productivity is even better because there are actually less workers than we thought. This has been a mystery. And I happen to think, and I've said this, and it really, I don't know why it triggers, because this is not a political statement at all. I do think a big portion of those are undocumented workers who don't get reported, and they are not accounted for in this adjustment, because that adjustment, the source of that data is from the unemployment insurance at the state levels. So if somebody's not on a payroll officially, if somebody's getting paid and there's no unemployment, those people wouldn't be picked up. but that's, that's neither here nor there. But I don't think it was altogether a bad thing. I think it's actually a good thing because I think productivity is it has been higher, and this actually makes some people have struggled to say why is productivity higher? Is it work from home? Is it new technology? Is it AI? Or is it that denominator at the bottom where we're getting that number wrong? And I think it's probably a combination of all of those, but I don't see this revision thing as a bad deal.
I was listening to Patrick Harker right before. I don't know if you were listening to his interview right before we started this recording, actually, and he was kind of talking along these same lines of saying, "Hey, yes, we're showing some weakness in the labor market, but it's still strong. Historically, we're still in a good place. We're not seeing massive weakness in the labor market. In fact, it's kind of what we're wanting to see so that the soft landing is still in place." He said, I can't guarantee. He said, we never know that, going forward, where they're still data dependent, but they feel like and I'm going to have to probably agree with him. I didn't know that they could pull off a soft landing, but right now it still feels like it. I guess we will see. I mean, one of the big questions going forward, I know the Atlanta GDP forecast was dropped drastically this week. And as we look forward, we may not know we're in recession before it actually happens. We may be in recession. I don't know, but I'm looking at S&P earnings right now as a means of gauging recession or not. And right now, it still seems pretty strong to me.
Yeah, I agree. And the comforting thing for me well, it depends on where my priorities are. If I'm thinking as an investor and wanting to see my asset values go higher, I am thrilled that the Fed is pivoting towards addressing labor now. And that is to avoid a recession and to try and engineer this soft landing that we've been talking about. So I think if the priority to you is seeing asset prices stay higher, and for all the other reasons too, by the way, we talked about this earlier too, is that the administration has some levers that it can pull to try and get some goodwill and to try and keep things chugging along. Well, I'm very bullish for the second half of this year. I don't think there's going to be anything other than some geopolitical crisis that's out of our control, and most geopolitical crises are in our control.
Yeah.
So let's just. So I'm bullish here. I am very bullish. I know you tend to lean bearish, but I'm very bullish.
I'm still I'm actually as optimistic as I've been in a while,
Okay.
to be honest, and it has to do with the fact that it does seem we're staying out of potential recession. They've pulled inflation back at a rate that I didn't think they'd be able to. So I'm actually pretty optimistic right now too. Now I'm not, historically, I'm going to be cautious in the really short term in September, just because September has a tendency to have a pullback. It actually would be really healthy for me. Like, I could get really bullish in the fourth quarter if we can have a 5 to 8% correction in September, at first part of October, and then have it be met with some buying, have some cash step in and stem it, as long as it's not a liquidity crisis type of situation. As long as there's cash there to keep buying the market, I think you could have a really big end to the year. In fact, I think if we run right now, may set us up for the wrong type of end of the year, but it'd be nice to see a little bit of a correction that we could jump in and buy. I've still had a lot of cash. Maybe I'm talking about my own personal preferences right now. I'd love to see a pullback so I can go repurchase some positions.
So skipping back to Kotok and thinking about what's coming up, you mentioned September. I'm sure you're watching Guyed, Michael Guyed, who was at Camp Kotok and really awesome to me. He's a really nice guy, and he's a little bit more abrasive on Twitter than he is in real person, and he knows that because the algorithm. The guy's got 750,000 followers, and he gets a lot of attention, and he knows he's found the formula on how to get people. But he's the guy that's been banging the drum since August last year that the Japan carry trade was going to cause things to break. And that one big pullback we saw in the S&P 500 on Monday, a couple Mondays ago, was ostensibly due to the unwind of the carry trade. But now you're hearing Kuroda talk about, this is Bank of Japan saying that they may need to raise rates again, and he's beating the drum for September, which historically is the worst month of the year. So I would expect that we're going to have a pullback before the end of the year, but I think higher, especially towards the election, is the story there. And the other guy that was there, just throwing out names at Kotak, was Mike Green. Yes, I give a fig, Professor Plum on Twitter. Dude, he is too smart. He is just off the charts intelligent. And he just released a podcast. I don't know if you saw, he and Barry had a sort of a battle about passive and active management. And I get to have dinner with Barry Ritholtz and Mike Green. The four of us sat at a table on the first night and got to talk. And they worked it out, or had already worked it out, because they actually recorded it. Barry said, "Hey, let's not have a fight on Twitter. Let's talk it out." And so there's a Masters in Business episode, and I got to sit with the four of them or the three of them, and we talked about it. They seem to work it out. And Mike is really freaking smart guy, really, really, really smart guy. He's next level. He's like 2 or 3 moves ahead. Yeah, I don't know if you know this, but he used to manage money for Peter Thiel.
Oh, I didn't know that.
And get this, before he managed money for Peter Thiel, he worked for a fund that was backed by George Soros.
There's 2 polar opposites.
That's
Peter Thiel and George Soros.
Yeah, well, it's probably a testament to Mike Green because he can be objective, I think. He had some heated comments that were valid about MMT, and really wish that we could, I think hopefully he comes back next year, we can get him engaged more.
So
yeah, actually, he said he'd come on. There are all these people that I talked to said they would love to come on the Everyday Trader. You and I need to get our butts in gear and get him invited and get him over here.
We need to sit down and calendar this out, because you're right. We could have some really good discussions with Danielle and Jim Bianco and Jeremy Schwartz. Jeremy Schwartz, I'm sure, would come on.
Yeah, all of these people. Like, why haven't David Kotok? David Kotok has a couple of really important things. You've heard him talk about how the debt debacle, or the debt ceiling debacle, it actually cost you money. Everybody listening to me, your credit card rates, your mortgage rates, it cost you money out of your pocket. And he can draw us rather, it's a little bit arcane, but he can draw a line to it and show exactly, you can see where it happened, and it costs real money to people. So there's that side of it. But he's also got his new book coming out, and I hate the title. It's called The Fed and the Flu, but there should be a better title. But he's talking about going back and looking at pandemics over the past 4,000 years and looking at the impact of those. Another reason why he came back very positive. He's got a really good message with 4,000 years worth of data. Not like, no exaggeration, goes back to the Peloponnesian Wars and looks at economic impact. So he's been working on that book for 12 years. So he's looking to do a live event. We talked about doing a live event with him in maybe April next year.
Cool. Well, one other thought before we wrap up, because I know we got to wrap up soon. You and I both have followed Mr. Buffett for a lot of years. I still consider him, maybe even because of his age and wisdom, the greatest investor to ever step on the planet. He has had some big changes in his 13F since you and I had talked last. One of them being one of the stocks that you and I have talked a lot about. We both owned it. We both probably do still own it. And that is Apple. Big position change in Apple for Berkshire Hathaway. A lot of other positions that he did liquidate. Not a lot of buying. Actually generated a lot of cash, particularly with that sale of Apple. I mean, $84 billion worth of Apple that he sold. What are your thoughts on Buffett right now?
Well, considering that he said the perfect time to own a stock is forever, would beg the question of why now? And there's, 2 possible thoughts that's a huge number of shares that he sold. You were 84 million. He cut his position in half. So now he has $84 billion worth of Apple, still number 1 position in his portfolio. And maybe it grew too much, but you have to say that he's not bullish on it. That has to be, if he was very bullish, he definitely wouldn't sell it. And he said wonderful things about Tim Cook and Apple and what a great business it was. In fact, 2 years ago at the shareholder meeting, he said if he could own the entire company, he would, but he can't. But I think they're done selling because they've gone down to a nice round 400 million shares. Seems
Yeah,
interesting. They trimmed to that number. They're probably going to hold here. So the question is, are they hunkering down for a storm? And Buffett tends to do very well when things are bad, or are they looking to buy something?
I think that's the latter one is I think what he's doing. I don't, maybe he sees a storm coming. I don't know. He did really well in 2007 to have as much cash as he did and step in and basically buy Goldman Sachs, bail out Goldman Sachs like he did. And a lot of the other positions that he was able to acquire then were huge benefits into Berkshire shareholders. Berkshire's stock is at an all-time high right now. Just absolutely crushing it.
So, in 2016, I was doing deep dives on fundamental analysis, and I was screaming that Buffett needed to buy Apple.
Yeah.
I had been on the bandwagon for that for years. Josh Brown threw out that Home Depot he thought, I'm going to tell you, Buffett will not buy Home Depot. I would love to hear from our audience if you have ideas on who you think Buffett would buy next. I know I don't. Actually, Buffett is very explicit about what he does and how he does the analysis. It's not too hard to do. It takes me an hour or two to do it on a spreadsheet. And if you got ideas, I'd love to hear who you think he'd buy. It's a quick analysis for me to do. But I tell you, I went and look at Home Depot. There's no way he'd buy Home Depot. So do you have any ideas on who he'd buy?
I could see Buffett buying somebody like Marriott or
Hmm.
I know he doesn't like the airline industry, and sometimes the travel industry is really, really cyclical. So that would be maybe the one argument against it. I would also say that I could see Buffett buying Amazon.
I honestly think it's something in the home space. He's got outright owns Johns Mansville, which is like Olin's big competitor for insulation, or Owens Corning, I'm sorry, big competitor. He's got several other home-based businesses, and of course he has what's the name of the Clayton Homes, the manufactured homes.
Yep.
I think the home market is prime. I like the idea of Home Depot, but it's probably something else, something obscure, maybe a water heater company or something like that.
Let's see, he can buy a lot of water heater companies with the $84 billion in cash that he generated from the sale of Apple.
Good point.
So Amazon makes a lot of sense. He could take a small position in Amazon. It's more of a retailer. I could also maybe see him, in my opinion, Walmart's expensive.
Well, I want people to comment. I'm sincerely interested.
I'd love
Please
to hear it too.
put down your suggestions down here. I'm willing to take my time and do some crunching on the calculators on some of those good ideas. I'll tell you, it's not going to be Tesla. Okay, I can guarantee you it won't be Tesla.
It's not going to be Micron either,
or it's not going to be Nvidia
or Nvidia.
Right? Okay. So you can discount those. Wow, good time. I wish we wish we had more time, but we got to go.
We'll wrap it up. Thanks for joining us, folks. Don't forget to like and subscribe. And again, give us some feedback on, we'd love to have a interactive discussion next week about what Buffett's buying. Maybe we can.
What's he buying next? Yeah.
What's he buying next?
Let's crowdsource this.
All right. Thanks, Eric. Thanks, everybody. See you at the next one.